Are you an accounting or tax professional who wants to stay ahead without spending a dime? Join thousands who trust insightful accountant and tax practice news to keep them informed and empowered. Get expert updates on QuickBooks, Xero, tax planning strategies, and workflow tips delivered straight to your inbox. Whether you're a solo bookkeeper, firm leader, or tax advisor, these newsletters are your shortcut to what's next in the profession. They're free, practical, and built for people like you. Visit insightfulaccountant.com and hit subscribe to start your smarter workflow today for free.
So Kristen, thank you so much. Thanks for being here. And if you don't know Kristen, her background is restaurants. First job was restaurants. We just found that out. But she has concentrated in that space from an accounting perspective. So she has a lot that you can learn from her. In fact, she just did a session yesterday, probably is available on demand. I don't know, with Royal Wise.
In the next day or so, yeah.
Okay, it's kind of a 3-hour deep dive into how you set up restaurants in QuickBooks. So if you want to go on that super deep dive, go out to Royal Wise and you can find Kristen's session there. So there you go. Thank you so much for being here, everybody. And thanks, Kristen.
Thanks, Gary. So I'm going to share my screen so we can get started. And hopefully everyone can see that well. My name's Kristen Nies Ciraldo. I am like Gary said, I'm a restaurant and bar specialist. I've been serving this independent restaurant niche for over 25 years because I started in it. I started working in restaurants before I started doing bookkeeping. In fact, I learned bookkeeping by working in restaurants. So y'all are my second language, not my first. My first language is, in fact, restaurants. I'm going to dive right into it because you can look me up on Google if you need to. But we'll go over, I think the content today is more important. So what makes a good metric? I think a lot of times we as accountants and bookkeepers can be a little bit hesitant to do things that people call advisory with clients that we feel like we don't have enough experience with. And I hear that particular observation a lot with regard to restaurants. So what my goal is, besides teaching you about what, or discussing with you about what prime costs is today, I also want to try and kind of demystify a little bit the idea of what restaurants actually need in terms of advisory and how you too can give them a little bit of that without having to have a PhD in restaurants or anything like that. It really is not as difficult as it might sound. And restaurants really need your insights because they don't have time to learn the finances. So we're going to just keep these sort of qualities in mind as we go along. We'll circle back to them at the end. So today we're going to talk about prime cost. Prime cost is made up of 2 KPIs, cost of goods sold and labor. And so over the course of this half hour, we're going to touch on both of those KPIs, but then also why add those 2 KPIs together to get a third KPI. That sounds weird, but this truly is a matter of like a peanut butter and jelly sandwich. You know, each of those is perfectly fine, but together they're like a whole different kind of delight. Or I guess I should say chocolate and peanut butter on that one. And then how a metric or a KPI like prime cost demonstrates an opportunity that you have as an accountant or bookkeeper working with a restaurant client, an opportunity you have to really speak into their business and help move the needle on what they can understand and how they can access their business better through their financials. So first things first, what is prime cost? Prime cost is just as simple as I just made it out to be. It's cost of goods sold plus cost of labor over income or sales. That's it. So to understand prime costs, obviously you have to understand cost of goods sold and cost of labor. But it's the most directly linked to sales of any of the other things you can compare. Obviously, cost of goods sold is directly linked, but labor is probably number two. And it can be up to 75% of a restaurant or bars, usually not bars, but a restaurant's spend. 75% of their sales might be spent on prime costs. And that might be what they're aiming for. That might not even be like out of bounds, right? And so it really is being able to give good feedback and being able to fill in the gaps of what your clients don't know with regard to cost of goods sold, cost of labor, and then just in general prime cost really is, I'm going to say 75% of the way towards helping that restaurant have good bookkeeping, good accounting, and being a good resource for them. So first things first, cost of goods sold. Oh, I know everyone who's done accounting or bookkeeping for a business who sells a physical thing has dealt with cost of goods sold. For restaurants, I think sometimes there is a little bit of confusion about what cost of goods sold actually is. Obviously, it's the food that is purchased and then combined in certain ingredients and sold, but it can also be reselling of prepackaged things. And it also relates to anything that is used to present or make that food, that menu item, whatever, make it available to the customer. I like to explain it to my restaurant owners this way. If your customer can leave with it, it's cost of goods sold. So that would include things like to-go supplies, right? For stuff that you deliver off-site. It's not something they're consuming, but it's not like it gets returned after stuff is delivered. It's not like or left behind, like napkins, and silver and things like that. So thinking about cost of goods sold that way, it opens it up a lot. And it's important to understand that because once you start thinking about how to break down cost of goods sold, it becomes necessary to maybe isolate those kinds of costs from the more classically understood costs that your client might be looking for. So having food and liquor and beer and wine, and then below that in a totally different category, to-go supplies or kitchen, like, those little things they put in steaks to see if it's medium rare or whatever, those kinds of things. Excuse me. So what makes cost of goods sold key for clients? We all know it is, but why specifically for a restaurant? Number one, it's pricey, and it's it's between usually 20 and 35% of their sales. Some people will get online and say cost of goods sold should never be more than 25%. That's not true. There are some restaurants like fine dining who have chosen to focus on higher level ingredients or more expensive ingredients, and their business plan allows for them to have a higher cost of goods sold. And we're going to get into that a little bit further down the road. But suffice it to say that usually if your cost of goods sold is over 35%, there's something wrong. So seeing where that money goes is critical. And also seeing where that money goes in relationship to the menu. Cost of goods sold, your target cost of goods sold, you don't just pick it out of thin air. If a menu is priced at 30%, you can do all the handstands you want, and so can the owner. You're not going to get a 25% food cost consistently because it's not priced that way. And so understanding where your clients have set up their structures, what price they're trying to get, what cost of goods sold they're trying to get to, what the average cost of their menu is important to understanding how to evaluate this particular KPI. In that sense, it's central. Almost everything that a restaurant does applies to this. And for most restaurants, it's overwhelming. A lot of chefs try and keep lists of this in their back rooms to calculate it themselves. And it's, you can help them with this. So the sources are basically the bills and the bank feed, and sometimes cash, it's a whole other kind of bummer. Um, but basically receipts and bills. And there's a lot of opportunity these days. It used to be very hard. We used to like put them in manually. These days, there are so many opportunities for entry of these things to be automated. And that's how cost of goods sold can go right for us as accountants in our processes. First of all, we can, by using automations, we can pick almost anything, any variable to sort of drill down into items. And we don't have to store all of that information inside QuickBooks or Xero. It can be stored in something like Chef or Margin Edge, and they're actually pulling all that item detail so your client can go on the Chef or Margin Edge and see what stuff costs. And you don't have to keep that stuff in QuickBooks, slowing the file down, but also if they need to know it, you don't have to answer it because they have access to it. So it also helps with automation and precision. You're getting better cost of goods sold because the mapping is consistent. It keeps things consistent. It's not a human being deciding where stuff should go. Items are specifically mapped and they will always go there. So there is a way to do cost of goods sold right, even if you don't do it by item, and even if you don't use automation. Having good categories can make consistency more likely, even if you're doing stuff manually. So, okay, where do you put cost of goods sold? You put it in cost of goods sold in the chart of accounts. I like to break stuff up by beer, wine, liquor, food, and non-alcoholic beverage. It just so happens that this place doesn't have that. And then what I don't know what it is. So sometimes they'll go to places where everything is mixed up. I don't see the receipt, so I know that they went to the grocery store, but I don't know what the heck they bought. That goes to unclassed. But I still have a total of cost of goods sold that I can compare to all sales. But having a cost of goods sold for beer that allows me to compare to beer sales allows me to give them a different percentage for just a particular category of sales. So that can be really important when diagnosing like if stuff is off. And just know that with cost of goods sold as a KPI, presentation counts, meaning how things are structured in the chart of accounts isn't just about what we do with it. It ends up on reports that they then look at. And so by making those reports a little bit more user friendly, we can make those reports more relevant to what our restaurant clients are needing to know. Labor is, oh, there's so many people, you guys, so many people. But it's just the same deal. It's pricey. It can be between 30 and 50%, and that's a planned percentage, let alone what it can get to when it's out of control. It also is central to what happens inside a restaurant. And even more than cost of goods sold, this is truly overwhelming for a lot of restaurant owners and management because with cost of goods sold, at least they can sort of monitor like what's going on with bills coming in and out. They might do the orders, but with labor, not only is there payroll, but there's a lot of requirements like payroll taxes and all the rest that come with it that they don't have as much of their arms around as much. So labor especially is a place where we can really help them understand. The sources, it's payroll and the bank feed, and unfortunately cash. And the difference between labor and payroll is that not all labor is payroll, but all payroll is labor. So labor like 1099 labor, catering, tips, workers' comp insurance isn't necessarily, you wouldn't necessarily put that with wages, those kinds of things that deal with employees and people that work for the restaurant to deliver services and experience to customers. So what makes labor right for accountants? Honestly, How it's set up is 50% of the issue. Again, any automations that you might have, that setup is crucial for keeping things consistent. Unfortunately, with labor, unlike cost of goods sold, you would think that we depend more on restaurants for information when it comes to cost of goods sold. And that's, we do, but basically we can say to them, hey, just please scan or deliver to us in some manner every single piece of paper you get regarding what you buy. That's fairly straightforward. When it comes to labor, not so much. We need to rely on them to track tips, to track, like there's so many things that only they can know. We can't get the information from a vendor statement. We can't get it from anywhere else. And so it's really important that we this is a place where we're asking them to do more for us. And the reason is that we need to cross-check all that stuff. Was the amount of tips taken in, the amount of tips taken out, etc. So this is how I set up labor. I just make sure to keep payroll costs and payroll wages in particular separate from other kinds of expenditures. And with labor, the thing that matters most is truly balance between what is summarized and everything being reconciled to itself. Okay, so here we go. Prime cost. So it might seem silly to add two things together that are already sitting there in front of us. There is particular benefit you get from looking at these things together. First of all, prime cost is a really quick way to see where you stand on both of these metrics. It's one number, and it's almost like it's almost like a little P&L, to be honest. It's almost like a little net profit. It's very forgiving. So if one thing happened that was bad regarding food cost, but they made it up by really making sure they sent people home early and didn't have a lot of overtime, guess what? They might have a good prime cost. So it allows people to feel like they're staying on track when they do the hard work of making up for things they can't control by doubling down on things they can control. It can be so demoralizing for someone that's just busted their butt to make sure that everything worked well in the restaurant, to have to face a high cost of goods sold or a high labor cost that they had no control over. It's nice to have the prime cost number acknowledge that they made the best of a bad situation. Not only that, but it's so easy to calculate. It's the easiest. It's two numbers added together. That's it. So what makes it good for us? Well, this is what makes it good for us. A lot compares to it. We can compare across all kinds of things, and it allows us to speak into our client's business in a way that isn't possible with some of the other KPIs. For instance, it gives us the chance to show that we're willing to do something outside the P&L. It gives us a chance to talk with our restaurant clients about having what their history is over time, how they've done over time. It's just something that can give them an idea of what we're looking at, of the work we do for them on their behalf. In addition, it gives them the language to be able to talk to their colleagues, who they talk to a lot, about how their business is doing without giving a lot of detail. So you can commit. It's true, like prime cost is a way that you can compare between restaurants, even across type, like think food trucks and bars, across level, like level of fineness or level of expense, and even across locations that might differ a lot in terms of how much they're charging and how much they're selling, including ones that have separate labor requirements, which can make labor higher. And the opportunity with regard to food cost or prime cost is it's the first step into advisory. So how you make it easy for yourself to step into this is you set up some signs. You try and make it easy for yourself, and you make it obvious for your clients to understand. One way I like to do this is by building in some things inside the chart of accounts itself. So I put my labor and my cost of goods sold in large buckets that are separate from other things. Obviously, cost of goods sold just separates itself, but I also put labor in a large bucket so that I can get a total on those accounts for that metric instantaneously. And if I run a report comparing to income, I have that KPI percentage right there on a collapsed P&L. In addition, I personally like to put their target numbers inside the account name so that when my client is looking at a P&L, they know if their labor and their cost of goods sold is making the grade or not. In this, they're going to be able to see like, hey, you're over by 3%. Your prime cost or your prime cost is about 50%. It's easy for them to see and understand. And that establishes a way that you are giving them feedback that they can use. So to get back to the beginning, what makes a good metric and why does prime cost qualify as a good metric? It uses lots of data from known sources and consolidates them. It is extremely automation friendly. All the components of this metric can be automated fairly well. It is a metric that does really well when viewed over time. It can compare well and legitimately across different experiences, weather, even years. Like imagine being able to compare the experience in the post-COVID years to the pre-COVID years. Prime cost is a metric or a KPI that smooths out a lot of the jagged parts of detail that sometimes make comparing metrics across longer time spans a little bit misleading. It's cyclical and it is very straightforward. And that's it. Finally, I always like to say, if you are thinking about doing restaurant books, but think you don't know enough about restaurants to do restaurant books, you know more about restaurants than you do about marketing firms. Probably you know more about restaurants than you do about being a doctor. Probably most of you have actually worked in a restaurant. So there's no reason to not try if you are interested. And I'm going to look through the Q&A, but before I do, there are 3 more of these webinars coming up. We're going to go into more KPIs for restaurants and bars. Then the next one is special requirements. And finally, what it's like to work with clients. And as Gary mentioned, we did just film a course yesterday with Royal Wise about how to set up QBO to help with restaurants and serve restaurant clients better. So there is that. I'm going to go back to, and if you'd like a link to that, or you can find it on Royal Wise, but if you'd like a link, I will also put one in the chat in just a second. Let's see. Actually, all of this. So anyone that would like, there's a QR code on your, I'll put it here. There's a QR code on the screen right now. If you would like to use that and shoot me an email, I'm happy to send you the deck and also an example chart of accounts, the P&L portion of the chart of accounts that I use with a lot of my clients. And this webinar will also be put on YouTube in the coming days by Insightful Accounting. The name of, someone asked the name of the program to look for regarding the QBO restaurant webinar here. I think you're thinking about the Royal Wise course that we just did. Let's see, and the past presentations that we've done with Insightful Accountant are up on their YouTube channel. And if you'd like to hit that QR code, I'm happy to send you an email with links to the past. So let's see. You can also email me if you don't want to do the QR code. My email is hello@mathforfood.com. And I think, let's see. Let's see. I guess that's it. There weren't a lot of questions, which I hope, this is just a half hour, so it's sometimes hard to like do a deep dive, and sometimes doing a deep dive on these categories can result in more questions than answers. But I hope each of you is just thinking, okay, there's a lot to learn here, but it does all sort of consolidate up into very specific KPIs, into very specific things to watch. And unlike some other industries, restaurants get accused of sort of not knowing about their accounting, not knowing about their finances. But the truth is that they know a lot about what they're looking for. So advisory is less about telling them what to do and more about providing them the tools and the insights so that they can better decide what they should do. So I just encourage you to keep an open mind with regard to that. And that's it.